Think about the little copper wire inside the charger you plugged in this morning. You don't see it, but without copper, the phone, the outlet, the power line, and the data center behind your apps all get a lot harder to build. CopperTech Metals is trying to turn that hidden everyday metal into a public stock story. CopperTech Metals, ticker CUX, is set to list on the NYSE, and ticker just means the short stock market nickname people use to find it. This is the cursor stocks, and the question for this IPO is simple. What would have to be true for this deal to make sense? This isn't a two-person startup with a pitch deck. CopperTech was established by Vedanta Resources, and it's built around the Konkola copper mines in Zambia, a mining complex with a long, messy, valuable history. The company is headquartered in Dover, Delaware, and led by CEO Deshni Naidu. CopperTech's job is not glamorous. It mines, processes, and smelts copper, and also produces cobalt. That means it takes rock from the ground, turns it into usable metal, and sells that metal into industrial supply chains. Your charger is the tiny end of the story. Mines like this sit near the beginning. The reason investors care is that copper demand is being pulled by electric grids, data centers, factory reshoring, defense systems, and all the wiring behind modern life. The company says U.S. copper demand is expected to grow more than 40% by 2040, while the U.S. imports about 45% of refined copper use. So the money engine is pretty direct. CopperTech wants to produce copper and cobalt at scale, then sell those metals to customers who need reliable supply. The business rises and falls with two big things: how much metal it can produce, and what the market is willing to pay for that metal. Now comes the IPO, the moment a private company starts selling tiny ownership pieces of itself on the stock market. CopperTech is set to start trading on July 1st on the NYSE. The deal offers 23.5 million shares, priced between $16 and $18, with the current deal size pointing to about $18 a share. Companies go public for a few normal reasons: raise money, give earlier backers a path to sell later, and become more visible. Here, the valuation, meaning the price tag investors put on the whole company, hasn't been set yet. That matters, because a good business can still be a difficult investment at the wrong price. The growth story is the part CopperTech wants you to notice. Management has talked about planned integrated copper production of 140,000 tons in fiscal 2026, growing to 300,000 tons by 2031. If that happens, the mine becomes much more important to the charger and grid story we started with. The bull case starts with the rock itself. CopperTech says the Konkola complex has average copper ore grades of 2.9%, and the deeper project can reach 3.3%. Higher grade ore can mean more copper from each ton of material, which can make a mine more attractive if the operation actually runs well. The second bull point is that this is a revival story with serious money behind it. Vedanta says it has already invested about $3 billion in KCM since 2004, and CopperTech is tied to an additional $1.5 billion investment plan. Investors will ask whether that spending turns into more metal, not just nicer promises. But here's where the story gets harder. Mining is not like opening more software accounts. You need permits, power, equipment, water, worker safety, logistics, and stable politics. CopperTech's core asset was caught in a Zambia ownership dispute before Vedanta regained management control in 2024, so execution risk is not theoretical. The financial reality is also mixed. In the latest full year, CopperTech brought in about $1.33 billion of revenue, meaning money coming in before expenses. But it lost about $340 million, and profit is what is left after the bills are paid. Right now, the bills are winning. This is the part investors will argue about. The IPO raise is about $423.5 million, which is only about one-third of last year's revenue. But the full company valuation is still not set. So the real question stays open. Are buyers funding a mine turnaround or paying early for a much bigger copper future? CopperTech also doesn't have this market to itself. If a utility, factory or technology supplier wants copper exposure, there are giant global miners already producing at huge scale. That doesn't mean CopperTech can't win, but it does mean investors should compare the story against companies with deeper balance sheets and longer public track records. Ownership matters too. The company says KCM has 20.6% local ownership through ZCCMIH, Zambia's state-linked mining investment group. For a new investor, that can be a strength because local alignment matters in mining, but it also means this business depends on government relationships, not just geology and copper prices. One practical filing detail to watch is who can sell and when. A lockup is a waiting period when early insiders usually can't sell their shares yet. If lots of shares become sellable later, that can pressure a stock. If the IPO mostly funds mine expansion, that is a different story than insiders cashing out. After it lists, don't try to follow every headline. Watch 3 simple signals. First, does production move toward the 2031 plan? Second, do losses shrink as revenue grows? Third, do customers and governments treat CopperTech like a serious strategic supplier or just another copper name riding a hot theme? The dream is easy to understand. More phones, data centers, power lines, and factories need copper, and CopperTech wants to supply a bigger piece of that need. The doubt is just as clear. Mines are hard, copper prices move, the company is losing money, and the final IPO price tag still needs to earn trust. So when you see CUX on IPO day, you can read the story without feeling lost. Ask what it sells, who needs it, what could go right, and what could break. Follow the cursor's stocks for more IPO stories in normal language. This video is for information and education only, not financial advice.